What do you think investors should most keep in mind as they navigate all of this market volatility right now?
The volatility is not over, not by a long shot. We were in the very, very early days of this administration, the very early days of the policy rollout. I know there's been a ton of back and forth, maybe some changed mind, changed positions. Maybe this was the plan all along. But as investors, we can never know that. So you can just predict that it's going to be a lot more volatile and unpredictable going forward. That said, the past few days have been a super valuable lesson on why we don't panic sell. Everybody I've talked to has been like, what should I do? What should I do? Do nothing when you don't know what's happening next. But once we start to figure out where this policy is going, then it's time to make some moves. But if you're not in the market for these big bounces after big sell-offs like the one we've had, it's very hard to regain the losses you may have had in your portfolio.
What are investors going to Investopedia to learn more about?
Everybody wanted to know everything about tariffs, trade deficits, the history of tariffs, Smoot-Hawley, what happened then in the Depression, what happened in 1987 in the Black Monday market crash. There was a lot of history that came flooding back for a lot of people. They wanted to learn that, but they also, some of them were looking for ways to play this. They were looking for inverse ETFs to play the downside, or now they were looking for the reverse of that to try to play the upside. We have this big ecosystem of investors, some just learning what this all means and some saying, how do I take advantage of it? A good mix of that going on.